Then I think you had this breakout with Professor Caselli now gathering all the questions and maybe adding a lot of them. But particularly, I would like to introduce our guest, Sara Ferrero. Thank you very much for coming today as CEO of Valextra, but not only CEO of Valextra, but for your investment banking, consulting, and fashion backgrounds. CEO of, general manager of Furla in the past, McKinsey consulting background. So thank you for having you here. I think it will be great to have your contribution. And obviously, Alessandro Piol, 30 years of venture capital experience, just landed, maybe a bit less, or I don't know. Strong technical background. I think we would be very interested and pleased to get your insights here, because clearly private equity and venture capitalist is an important driver of transforming business, supporting transformation, and I think this is the topic of today. We have seen media, we'll see you, we'll see retail transformation in the afternoon, and then banking transformation later on. So please join me on stage, and I leave the room to you, Stefano, to get started. Thank you. Let's big round of applause of our guests. Sara, thank you very much again. Welcome. Alessandro too.
Grazie.
Welcome.
Grazie.
Stefano.
Great. Okay, thank you. So I think we can start. So I have to say it's a very unusual round table for two different reasons. The first one, I'm very pleased, to manage a round table with two great friends of mine. So it's incredible to have here together. So Alessandro just arrived from New York, and Sara Ferrero, which is basically everywhere, but today is in Milan. And the other aspect is that I have to apologize. I know that you have to work a lot, so I know that you are divided into 9 groups. You have to suffer because I sent a very boring notes about, sorry, I'm a finance guy, about private equity and venture capital. And the outcome was incredible because we received more or less 200, no, I'm joking, but we received more than 60 questions. So we have a lot. We have only 4 hours to manage the round table, so probably it could succeed. So we can skip also the lunch. But however, it was a very great effort, to select questions and to be serious. I want to say thank you very much to the group of incredible research fellows of SDA Bocconi, so Vincenzo, Mattia, Giulia, and Giacomo, that had, to screen all the questions. And especially I want to thank you, all the directors of the MBA family, so Vincenzo Baglieri, Stefano Gatti, Giovanni Tomasi, Nando Penarola, that supervise, the entire process. I have to stop, even if I would like to say something about private equity venture capital. It's my life, but I think we have to start with our guest, and we have time to discuss all together. So considering the life cycle, of equity investor, we start first from venture capital. So we have first venture capital, and later stage we have private equity. So we start with Alessandro Piol. So first of all, I kindly ask you to say something, probably everyone knows you, but to say something about your background, and 10-15 minutes to...
I thought I had 2 hours, no?
2 hours, sorry, I have to cut something, so I'm sorry. So to say something, about your view about venture capital. You stay in New York, you see the story from a very different angle, better, worse, I don't know, but Alessandro, you have to start.
Okay, so let me just give you a sense of my background to start, so that you have a sense of what my journey was to get to venture capital. I started as an engineer. I studied computer science at Columbia. I've been in the States for 40 years. So I went to the United States when I was a teenager with my parents, and then they came back, I stayed. So I was doing university at the time, so I never came back to Italy. So I studied engineering at Columbia, computer science, and then I worked for a software firm for a few years. This is in the 80s, so it was a different world than today. But when I was already working in software, I was starting to notice this area called venture capital. I met a few venture capitalists. I thought, wow, these guys are really having a good time. having seen all this technology, I was very interested in technology, which I think is one of the keys to be a good venture capitalist. You have to be passionate about the subject matter, otherwise, you don't get into it, you don't get the interest. But I was very interested in technology. I noticed this thing called venture capital. I thought it was interesting. Then I went to get my MBA. And then after that, I thought, well, maybe I can go to venture capital now. Then I decided, no, maybe I should work for a big company first so I can get the type of experience. So I went to work for AT&T. AT&T was a great time. It was in the late 80s when, after the breakup of the telecommunication industry in the United States. So it was very interesting times with a lot of new activities, deregulation, opportunities all over the place. And there actually I did some things that were on the periphery of AT&T, but actually very interesting for me, a very good learning experience because I was able to start a company out of Bell Labs. So it was a startup that was spun out of AT&T. And then in the early 90s, when I was ready to then leave and try to get a job in venture capital, AT&T decided to start a fund, and they asked me to be one of the founders. So I started in venture capital back then, and this was AT&T Ventures. We did very, very well, investing in all sorts of technologies, early stage companies. And then from there, I moved on. Went to work for a bigger firm in New York. There was at the time called Chancellor Capital. There was one of the was the investment management firm, but the venture capital group was a very early player in venture capital. They started investing in 1980 in companies, in funds. So it was an interesting group of people that I joined with. And then the firm got bought by Invesco, so we became part of Invesco. And then eventually we left to start a new firm that was basically also investing in funds and doing venture investments, more later stage investments. And then finally, about 4 years ago, I decided that I wanted to go back to investing early stage because the world has changed. We found ourselves today in a world where the cost of starting new companies is about 5% of what it used to be 20 years ago, because you have a lot of capabilities available to you between shared services, web services like AWS. You have APIs. You have open source software. You don't have to buy lots of equipment, lots of software to start a company. You can just do it with a couple of laptop computers and in a shared space, right? So investing early stage is very interesting today because there are a lot of companies and you have to figure out which ones are the best ones to invest in. And I decided to start a new firm that will be focused in very specific areas. In our case, it's around safety and security, so cybersecurity, physical security, transaction management, things that, all those things that are sort of have to do with, as we say, protecting people and assets, right? Because today is one of the big problems we're facing is actually security, and we think it's a huge opportunity. So now I'm in the process of sort of restarting fundraising, investing in companies and so on, and which is very exciting because it's sort of a new beginning, if you will, right? We're looking at things in a different way. We're trying to figure out ways to add value to companies. We're doing a number of different ways. So it's a lot of fun. It's very interesting, but it's sort of the continuation of what I've been doing for the past almost 25 years, right? So that's a little bit my historical background. I think that venture capital, going back to the theme of the conference, clearly one of the big drivers of the U.S. economy for the past 30, 40 years has been venture capital. Some of the big companies, the largest market cap companies in the world today are companies that were originally venture-backed, right? Companies like Google, Apple, and so on. So it's has been a huge driver of wealth, of jobs, of new business, innovation, has had a tremendous impact not only on the US economy and the US culture, but also around the world, right? And I think that's something that will continue because innovation, things keep changing. Innovation doesn't go away. Innovation is always there. Okay, so there is always new things. Maybe we started in '95 with sort of the introduction of the internet that has changed the dynamics of it's touching every industry. And in the future there will be other things that will happen, right? We've seen now the rise of things like artificial intelligence and robotics and a number of things that will have a profound effect both on social issues as well as economic issues. And then we have the whole world of genomics and biotech that's sort of also taking new avenues, new directions. So innovation is here. It doesn't go away. It's always here. It's always here to stay. As long as there is innovation, there will be opportunities to invest in this type of things. And so it's a great area to be in, right? And what else would you like me to say?
I'm curious about, probably I have to use one of the questions, but I have 200 questions, so I can use one of the questions. It's, when we talk about venture capital, so the temptation or the mantra, if I may say, is to say, okay, there is a certain model, it's the US model in which stars are all aligned together, so universities, they transfer technology, so start-uppers, they have the culture, they could fail or they have to fail, and blah, blah, blah. And the temptation sometimes is to say, in continental Europe, it's cut and paste. My feeling is that cut and paste is not possible, but we should do, or we have to do something, to improve, the quality of the ecosystem in Italy, but I have to say in several countries in continental Europe. So it's a huge question, but what is your view related to that?
Yeah, it's not only a matter of, let's say, the infrastructure, but it's also a cultural issue. But don't forget that in the US, it took this whole process started around World War II, right? In 1939, when Hewlett-Packard got started with funding from a professor at Stanford. So it's been a long process. Then it started picking up speed in the 60s and 70s, and then in the 80s really became more mature and grew much faster with a lot of players. So it's something that takes time. It's going to take less time today in new ecosystems than it took in the US, but it's still something that takes time. I think in the US now there is a very specific, I guess, culture and also dynamics that are well understood, right? Because yes, you get a lot of talent out of universities. I'm on the board of Columbia's engineering school, and I see that the number of students that want to go and do entrepreneurial activities today is huge, right? So a large percentage of the students want to do something and they start businesses while they're in school. So it's a complete transformation of how young people see opportunities today. But again, it took a while to get there. I think in Europe and in Italy especially, we always talk about the culture of failure that's missing, right? So in the US, if you fail, if you do something, it doesn't work out, and you have your company goes belly up and bankrupt, whatever, the next day you can sort of get up and start a new one, right? And it's understood that these things happen when you take risks. Sometimes things don't work out, but it's something that's understood in the culture, understood by people in business in general. So there is this culture that if you fail, it's okay. You can do something else afterwards. You can try again. While in Europe and in Italy, there's more of a stigma if you don't. And maybe that's changing here too. But my impression is that if you fail, then you have more problems. You know, you're seen as someone that did something that didn't work out, and it's not a positive. You know, it's much harder to get up and do it again. But also the other thing is that in the U.S., and you know this by reading stories about Steve Jobs and Bill Gates, and all these superstars have created huge companies. In the U.S., there is a culture of success, right? And there is a culture of success that if somebody does well, it's seen as an example, right? It's seen as somebody that did something special, and it's an example of success, somebody to imitate, somebody that whose journey you study to see what they did right, what did they do to get to where they are, right? So it's something that people talk about. You see articles being written, books being written about all these people, Zuckerberg and so on, all dropouts, they left school and started companies, so there is this culture of success where successful leaders are followed. While here, if you're successful, it means that you stole something, or you did something that was dishonest, or that's sort of the impression that you get here, that somebody successful means that they did something that was not correct, and that's not. Unfortunately, that's not the right attitude. So culture needs to change a little bit first, and I think if we see successful entrepreneurs, we should celebrate them, and we should explain what they've done and take them as an example. And in Italy, there are a lot of successful entrepreneurs that we can take as examples. And when we start doing that, then the whole ecosystem will flourish, because people want to imitate successful people. And when you have successful leaders and successful entrepreneurs, then the money will come too, okay? Because one of the things I did a few years ago was I wrote a book about the New York ecosystem, and so I started studying how the ecosystem. This ecosystem forms. Like in New York, it was a relatively new example of a tech ecosystem that was started in the 90s, right? So it's not as old as Silicon Valley, but it's flourishing, right? And I think that one of the things I learned is that when you have these new types of communities, ecosystems, or entrepreneurial communities, it doesn't start by putting money in, right? In fact, Mayor Bloomberg, that was the mayor of the city of New York when many things happened, did not start funding some of these activities. He tried to help companies with maybe less taxes or help on the real estate side and so on, but he didn't pour money in. Money is the last thing to come. What's really driving an ecosystem is really the entrepreneurs. And so when there are entrepreneurs and there is talent and you start companies, then the money will come. And that's what needs to happen. It needs to be encouragement for the entrepreneurs to start companies. When we start to see some of these things happen and be successful, the money will come from all over the place. The reason why we don't have foreign investments in Italy is because a couple of reasons. One is because there are not enough examples of success or there's not enough companies or things to look at that have a chance of being successful. And second is that we still have a lot of rules and a lot of red tape, a lot of bureaucracy that doesn't quite work, right? And people will be concerned about that. But I think that can change. So in the next few years, I expect things to improve and change to be much better.
Thank you, Alessandro. So I agree with what you said, so related to the culture of failure. So it's also a matter probably of storytelling and taxonomy. So we say failure in Italy, we have in mind bankrupt and default. So it's a matter of change also of the usage of words, in qualifying.
Bankrupt has a different connotation.
I know, but they are linked together, in the imagination of, in Italy. But let's move to Sara. Again, as I asked to Alessandro, some highlights about your story. You have, many aspects of your incredible career, and after that you have to focus, on the topic, which is represented by private equity, which is using your angle in analyzing the story.
Allora, I started my career as an investment banker in London. After investment banking, I moved into consulting in McKinsey in Milan. In reality, very soon I started working in New York, in London, and in Paris, because I started really focusing on retail, fast-moving consumer goods, and fashion. We're talking about the 90s, where fashion was still not very used to use consulting, so I kind of became a little bit of an expert, and after kind of a guru. When I was 32, an Italian entrepreneur, a woman, that owned this company called Furla, asked me to join her to help her to transform her company from an Italian company to an international company. So I didn't know how to do anything apart being a generalist, because I'd been in McKinsey until then, and really took the chance and went there. I stayed there for 6 years. We tripled sales. We took a company that was mainly Italian, with 12 subsidiaries that had just been open in 18 months, all losing. And we transformed the company in a 3 size bigger company, one of the most profitable companies in the fashion business at that time, and was an incredible experience for me, and I suppose also in a very particular moment of fashion in that period. And we're talking about 2002 to 2006. After I was called by instead a company owned by Japanese, so very different ownership from an Italian owner to Japanese owners. Quite particular there, because you can imagine Japanese are known to be not particularly good with women. And quite difficult to work with, because they tend not to give very clear answers. No? When they say like this, doesn't mean yes, means basically I hear you. So it's kind of difficult to understand what is their ambition and direction. Anyway, I run a company called Joseph. Joseph is a company based in UK that had 2 legs. One was a multi-brand for luxury brands like Dior, Celine, Chanel, Prada, you name it. We were buying more than 120 brands. And the second leg is actually their own brand that is very well known for high-end essentials, so trousers and jackets and shirts. And since the Japanese had bought the company had lost 50% of their revenues. So again, I came in a difficult moment for the company. I stayed there for 5 years, put together a very strong team, and that was more of an experience of really redefining the strategy, the positioning, and after it's really about execution. So again, after 5 years, the company was doubled and very profitable, and it managed again to reconquer an international positioning, whereas when I arrived, it was mainly UK with a very unprofitable Parisian business. At that point, I said, okay, I've done it twice for others. I really want to become an entrepreneur. But, and really what I wanted to focus was in all these companies that I had the opportunity to understand and look while I was in Joseph. As I said, we were buying more than 120 brands and we were selling 120 brands. So you really had the possibility to see companies in fashion can raise very fast from being like studios to suddenly become big stars. So I'm really talking about going from 15 million to 300 million to 1 billion Bottega Veneta went from 32 million to 1 billion in 10 years, and many other examples. And wanted to create my own fund, so focusing mainly on branded, high-end brands, not necessarily in fashion, also in design, entertainment. And while I was looking for someone to join in my idea and looking for funds, I met with David Belassen that had just raised his second fund in investment in private equity called New Investment Partners, and we joined forces. It's funds. This fund mainly focuses, as I said, in high-end brands. We invest in fashion. So we had investment like Paul's, so the bread company, very strong in Paris and now all around the world. The fund was our early investor of La Durée, so the macarons, when they had 4 patisseries in Paris, and actually was sold back to the owners when there were 70 patisseries, and really created what is La Durée today with the Marie Antoinette idea. And after we bought and sold Allen Micli, the glasses, to Luxottica, and now we have in portfolio Valextra, which I now CEO. We have Obica, we have Ami, that is another fashion brand. We just bought experimental cocktail club that is 2 young entrepreneurs from Paris that do boutique hotel and bars. And we have Mila Harris, so we're a perfumer. We just bought 1.5 years ago Tom Dixon in design. So it's more of consumer-related companies that are between 15 and 50 million. So that is the hotspot that I focus and I like. Most of, and I'm now kind of focusing on the question about transformational role of private equity. So really, most private equity, as you probably know, are, there's a lot of above 1 billion of funds run. At that point, obviously, the size of the company that you acquire has to be of a certain size. If you go too small, you will find yourself running thousands of companies, and it's very, very difficult. Private equity, as a little bit different from venture capital, tends to buy majority. Not necessary, but tends to buy majority and to have a very active role in helping the company to untap potential, which can be either growth or turnarounds. So they tend to go from 100 million and above. I tell you about my experience just because I think I can give you some more direct experiences. We instead focused on the 15 to 50 million bracket, just because our fund was smaller, obviously, and as a far less competition. To really manage to have, the fund, NEO, is currently running with a 4.5 time return, which is an amazing return. That's the reason why. And we tend to do small funds, buy very fast, use it, and go for another fund instead of having 2 to 11 billion, and after being forced at a certain point of your life to really have to do a big acquisition. Now, this sector, why is transformational, especially in this sector? Obviously, small companies do find it very difficult to raise capital, but that's not the only point. And so obviously the banks will give you a little bit of money, but it's very difficult to find someone that will fund the entire business plan that you have. And the more aggressive you are, the smaller you are, obviously your ambition are infinite. So your business plan tends to be, often requires a level of cash versus the risk that you have that is quite high. So that's one point that obviously a private equity can give you. The second point that I think is much more interesting in our case is really, it's really compared to my experience with Giovanna Furlanetto, the Japanese, and Neo, and now that I'm running Valextra, is very clear what is the ambition and the objective of the shareholder. In private equity, you buy to sell. And you more or less know how many years you have to do this. So how to do it is where you get the discussions going on, but there is a very clear objective of what you have to do. So most of the work as a CEO that you have to do is really think about how do I obtain the maximum value. And this goes back to another point of private equity, which is in private equity, which I suppose is the same in venture capital, is the critical moment is when you buy. When you buy, you have to obviously buy at a good price, but what is the price? It's really, one of the important points is already thinking when you buy at who you're going to sell it. So in case of Valextra, when you buy it, you have obviously, the better it is the company, the more people want to buy it. So at the end, it's very difficult that there is a gem that no one is looking at. So obviously there is a competition in understanding what is the price and how much price you want to give of the growth that you're eventually going to do is the real point. So it's about how good you know that industry, who is going to be the management team that you're going to put in, because the talent is essential, and who are you going to sell it for. So obviously, in our case, when we go above the 100 million, the spectrum of potential investors become huge. Obviously, running a company thinking that LVMH is going to buy it is different than buying a company and to try to sell it to Permira. I'm just making two examples, but it could be anyone, no? So it's really the levers that you want to work on and how much push into growth, how much push into profitability, and how much push into the intangible of branding and desirability is obviously very important. And the same would go for any other business that we have in portfolio. Knowing who is your buyer is very important. I was sneaking in the questions of the groups, and I saw one question was about exit strategy. Exit strategy is a consequence. You think about exit strategy even before buying. We actually were trying to buy a company where we were nearly signing, but we could not find a CEO for this company. We looked everywhere. We couldn't find someone that really wanted to come in and get this company. We decided to pull out. If no one wanted the challenge, probably we were, maybe was going to be a difficult one. So money, obviously, the goal of growth and value creation. The third point really, I think, is organization and professionalization of companies. A lot of companies, small but also big, and it's quite incredible every time I enter in a company, they're actually quite a mom and pop approach. Often there's very little KPIs, very little moments where you have people that challenge what you do and maybe ask the right questions. There's often a very confused organization where you don't really know who does what. So I think with the portfolio manager really enables through strong financial requests to highlight maybe untapped areas that you probably on an operational activity don't necessarily always focus. It helps you to really look at your organization and attract talent as a CEO, but not only as a CEO. And finally, also to really push the company into direction that maybe our owner has difficulty in doing. Last point I would say about is transforms managers and entrepreneurs. And this is something that is, for whoever is currently a manager, I think is the biggest thing that I've learned. The moment that you are there and you have a big stake, when you go in a private equity, you're not paid the maximum from a salary point of view. And really, also the bonus and the salary, frankly, is not what makes you really run. It is about creating the value. This company are going to be sold. You usually are also paid with a quite significant stock option plan. And so obviously suddenly you're not anymore trying to do your 3 months result or year-end result to get your bonus, but you're really trying to create that real value, perceived retail value, for which the moment that they sell, you're going to be, is a game changer. Obviously, you don't work for money. That is because you work because you're passionate about what you do and you believe it, but that is a game changer. And the other thing is you don't get it only as a CEO, but I think the most effective private equity are the ones that have managed to give this incentive also to the team. Because you get a very aligned team that really, really works for a final objective and is a very empowering and incredible energy maker that really changes the whole dynamic of companies. And that really is a changer. So this is really my 4 big points about what I think transforms, why private equity do transform a company.
Thank you, Sara. But we're going to come back to some issues in a couple of minutes. I would like to start with questions we received from the audience. The first one is for Alessandro. So on the one hand, if I may say, it's an evergreen, this question, but on the other hand, it's really one of the hot problems related to VC. And basically, the first question is related, how do you combine, coming to your experience, so the dilemma between, the short term related, to IRR pressure, related to VC fund, and sometimes, medium long-term perspective of a certain company operating, in quite, also risky sector like digital and so on. How do you see this never-ending story related to the combination of these two, side of the story?
So, you're asking about the short-term?
Yeah, exactly. Pressure of IRR for VC funds and, medium long-term perspective for VC-backed companies sometimes.
Yeah, venture capital is a long game, especially in investor early stage. You can expect to exit a company for 5 to 7 years. So it's always a challenge. In fact, it's a challenge also for the investors in venture funds, because some investors, a lot of investors like to see shorter-term liquidity, right? So so only shorter-term investors will be willing to go into venture funds, knowing that it's such a liquid investment for a long period. Clearly, the promise of venture capital is that it can generate huge returns, right? And that's a reason for people to go into that. But it's always a challenge. I think as Sara said, I was smiling when you were saying this, yes, but we're not in the business of entering companies, we're in the business of exiting companies, right? So exit is definitely something we think about from day one when we make an investment in venture capital also. And today there are starting to develop some other ways of getting maybe out from companies earlier. There is a more active secondary market that did not exist until a few years ago. So today you see investors that will go into a company, into a venture-backed company, and buy out some of the early-stage investors, for instance, or some of the angel investors, or some existing positions in a secondary transaction, which creates the opportunity to exit a little bit faster. There is also, so for investors like us who invest early stage, if it's a good company and grows, at some point there may be an opportunity to exit at least a portion of our holdings to a secondary players. There is also some of the exchanges like NASDAQ is looking at creating a secondary market. It's tricky because, you know, the type of securities we deal with are always, they're not just common stock. We just prefer securities, there are preferences, you know, the capital structure is a little bit complicated, so if you don't have the whole picture, you don't know what you're buying, right? So that's the challenge with a secondary transaction. But we know that NASDAQ and a couple of other entities are trying to figure out how to build a secondary market for private stock, which will be, I guess, will make investors in the sector feel a bit more comfortable about investing in this.
Thank you, Alessandro. The second question is for Sara. It's a huge question, and yesterday we were talking exactly about this topic, but it's related in a certain sense, coming to your expertise, what are the key factors to enhance an effective corporate governance within PE-backed companies, where the question is mostly related to the interaction between the new shareholders and the previous shareholders and managers. It also a specific flavor related to the balance between the usage of contracts and the usage, you know, of soft factors, because however companies are made also by human beings working together.
Sure.
So huge question. We have a couple of minutes.
I think the point of corporate governance is incredibly important in private equity-backed companies. As I said, you usually go for majority. In reality, more and more, because the best companies have a lot of potential candidates that want to buy them, and often someone doesn't want to be diluted immediately. We are trying more and more to do a different kind of structure. So you may also find yourself in getting into companies with a minority stake, but you want some points of the governance to be able to control. The main points in general, obviously, for private equity to really control a company is hiring and firing of the top management. That is one of the key points. Obviously, the minority shareholder, that is often the founder or the previous owner, has to give up on a big point on that. And I want to come back on that because I think it is an essential point. The second point of the governance is actually exit, when you want to exit. And you know, some founders want to get the money, they get the courage to get the money, but after when they have to actually sell, they suddenly understand they've lost the control. Now they lose also the company for good. So that, and also not necessarily everyone is agreeing when is the best moment to sell. Now, when a company is going incredibly well, you fight because you think, let's keep it another year, the value is going to be higher. But the most difficult moment is when companies don't go very well, and it happens. So that's when, it's like when to cut the loss or when to really go for. So the timing of selling is an important, very, very critical point in the shareholders, but also with the management. The third point is obviously big decisions on investments to manage to get a strategy. Especially smaller companies, every time you double sales, I always say, is like having a new company. Often with a set of skills and people that you can afford that are different. So it's constantly kind of revolutionizing in a certain way the organization there is again where board and executive committees really get significantly into it, and the corporate governance is very important to allow fast decisions. For me, that I worked also, and I helped public companies, the big difference was getting in boards where nothing was decided, and it could create either a too wider space for CEOs, or situation where nothing was decided and nothing was done. And this is really instead, I think, an element that really helps companies to perform, is this system that allows quick decisions and with a majority.
And that's a cultural revolution, to have a board effective.
Is absolutely a
considering continental Europe, but also considering a lot of listed companies in Italy.
It's a board, and for me, even more than a board, is executive committee. So the boards often come to decide on budgets, on on bonuses, but the real moment where things happen is in effective executive committees that happen on a monthly basis, and whereas in many private companies don't even happen, or public companies happen maybe at a longer period. And I think having someone that is with your breath on your neck is really something that allows overperforming both in an effectiveness and efficiency.
Thank you, Sara. And for Alessandro, so we skip from venture capital to private equity and we come back. The third question, it's related to the issue of crowdfunding. So it's also very popular nowadays. And the question is related to the relationship between venture capital and crowdfunding. How do you see is cooperation, is competition? It is not a tool related to enhance really venture capital, just simply a matter of other, purposes. So how do you see the story of crowdfunding?
Well, it's a story that's only starting now, so it's the jury's still out in terms of how effective it is. I'm talking specifically about using crowdfunding to fund a company. There are examples of crowdfunding of projects like Indiegogo or Kickstarter that work very well, and that will continue, but that's very specific things. But in terms of raising money for a company, I know there are entrepreneurs that are seeing that as a good option for them, and it may very well be, but I think there are some advantages. In a way, it's competing with, it's money that's competing for investments, mostly against the angels or early stage venture capitalists. So in a way, it's competition, right? And that's fine. The question is whether the companies perceive the venture capitalists as bringing some additional value besides just money, or because if that's not the case, then they might as well do a crowdfunding project, and you probably can find money that's less dilutive, and money is green everywhere. So if you're not looking for any value add from the investor, then crowdfunding is a perfectly good option. But if you believe the investor can bring you some additional value, then you should think about it and decide what kind of value you can get additionally.
Sorry, just jumping in. I think that is really the point. Like, everyone is talking about the money that comes from private equity or from venture capitalists. Really, the change instead is, the money is obviously one thing, but if you're not finding money, you have to ask your question, why you're not finding the money, okay? Because the money is outside there. There's plenty of money. It's about what really, when you choose who is going to invest, you have to really imagine who can bring you a network, understanding really of the business, right. And that is the real, and people, like the point is, if you are part of a private equity or a venture capitalist that has been incredibly successful in the last 5 years, longer, I think, is other people that have gone out, spin off and whatever, that is incredibly important, because at the end, we're always talking about people. So if someone can come in with an incredible network, with incredible experience, think about it. Like a company, some of the private equity have managed to do more than 50 deals in 5 years. 50 deals between buying and selling. Who else has this kind of experience in 5 years to do 50? So they do know more than probably every private company that is around. No one does this kind of trade. So it is really a huge experience in dealing also with a difficult situation, not only buying and selling, but really changing moment of companies. And this is something that you're tapping in venture capitalists, but also in private equity. It's really sometimes not understood the value of that. Sorry, I didn't want to interrupt.
And the other question I want to, to relate to what you said, it's a question mostly focused, if I may say, on your story. So the group, I like the question related to your story, related to Furla to Valextra. At the end of the day, the question is based, what was the secret, if I may say, to really multiply by 2, by 3 sales of a company, which is, at the end of the day, the desire of whatever kind of CEO, but it's also, if I may say, the basics of a private equity investor willing to invest. Again, it's the elephant in the room, but if you can say something related to the secret of this mechanism.
Okay, maybe I talk about a minute Valextra in this moment, because it's a private equity funded company, and is a beautiful company that who is Milanese maybe knows it for a long time, and it's been kind of stuck between the 5 and 10 million forever, ever. And it's been bought by Samsung, it's been bought by another Milanese entrepreneur. Why? Why suddenly the company in 2 years is doing 3 times as much? What is the difference? I think, and this can be replicated for most cases, and after maybe we touch on Furla. So the point is, first of all, you have a business plan, a concrete business plan that is fully funded. It's very rare when you are that you have a fully funded business plan. So a private equity, obviously, you have cash. Now, the problem with having a lot of cash can also sometimes transform company in the bad way. You start using money and wanting to do everything immediately, and suddenly 1 year after there's no cash anymore, and that's kind of, everyone gets cold feet. But so I suppose the fact of having cash really can help a company to grow, but after you have to use it well. And to use it well, I'm sorry, but it is about, at the end of the day, having a strong management. And so for private equity, is to choose people is essential. Not necessarily is a good manager is good in every venture. So finding the right person for the right venture is essential, is really essential. Also because if you put the wrong CEO, you lose, or the wrong CEO, you lose time. And because in private equity, you do have a time frame. And when you put a CEO, it takes more or less 1 year to understand if the CEO works or not. Because at the beginning, you are in this messianic period where everything is okay. If you've made a mistake and you put the wrong CEO in place, after you're in that strange situation where it's better to cut your loss and change it early, but in the same time, you don't want to go on and changing CEOs. So I think in my experience in Valextra is definitely the money has helped. Having someone that had experience in that, which is me, I've done it already a couple of times, is the network that you build and that the private equity can take. But in every situation is about having a strategy, but especially an execution. Is all about execution at the end of the day. In Furla has been the same. was a company that had grown very fast, had arrived to the point that because it had no KPIs, had a business model that had become obsolete because the company had gone from being an Italian company to being an international company. With a wholesale mentality instead of a retail mentality, you really needed someone that had the courage to look at it with a little bit of distance and start to really understand where was the opportunity and start changing the organization and the company focus. And that took a company from being very profitable in Italy and very, 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 very unprofitable internationally to become incredibly profitable internationally with a strong core in Italy and really refocus on changing the business model and the supply chain from Italian-based in the 90s and the 80s was possible. In 2000, really, we were completely Italy was completely non-competitive, and so switching also production into China, Romania, etc. Also, that was an important change. But I would say it is people, talent. The great change for me today, and I take a point that Alessandro said, whereas when I got out from university, if you were a talented person, you wanted to go and do investment banking. When I got out from MBA, the people wanted to do private equity. Now, when I go and try to recruit people in university, they all want to be entrepreneurs and startups. So that is a very big shift. So you manage to attract, even in smaller company, the best and most creative talent. And this is, for both a private equity company and a CEO, the most incredible moment for small and medium companies, because we do manage to get probably interesting people even much better than probably some of the big companies. And that's the most, for me, is the most exciting thing, is attracting talent.
Thank you, Sara. Last round, as you know, lunchtime is approaching fastly. The last round and the very last question. Last round is related to, I try to package together many questions related to two sectors. So many groups are put on the table questions related to healthcare system and real estate. So putting, on the table questions related, how can you combine, how do you see investment in healthcare system and in the real estate system? So with a special flavor also on luxury real estate. So next year in Milan, 10 luxury hotels are going to open. So I don't know how you want to share these two, two stories, but healthcare and real estate, many questions related to that.
Clearly, there are investments in both on the private equity side as well as the venture capital side in both areas. I think in venture capital, healthcare, IT, digital healthcare and so on is a big area that's growing. But there are a lot of, whenever there is an industry that can get optimized, there is always some companies trying to do that. And in the area of healthcare, there are a lot of opportunities that have to do with modernizing the system, right? Certainly in the US, but I guess could happen everywhere. In the areas that I'm interested in, clearly there are a lot of issues in healthcare about protecting data and privacy that are popping up that we need to be conscious about. And we looked at the type of information that gets sold on the dark web and so on, and healthcare records are some of the most valuable information gets sold. So it's a problem. The problem of protecting data around healthcare is a big problem that needs to be solved. And the problem of sort of streamlining the system and the processes in healthcare is also something that's been addressed. On the real estate side, I think some of the not in area investing, but some of the areas I see that we see a lot of startups have to do there too with there are some companies that are focusing on the real estate development side. So So you see companies developing systems for to manage projects, you know, and real estate type of projects. But you also see companies that are focusing on the sales side, the transaction side in real estate, both on the consumer side as well as on the because again it's an inefficient inefficient process with a lot of intermediaries, brokers, and so on, that they think at least some of the entrepreneurs think that it's a process that can be disrupted, you know, to be seen, because when you have an industry with many strong forces in place, it's very hard to disrupt. So, but I see a lot of companies that are popping up in that area. So, number of opportunities. I mean, again, we're focused more on the security aspect, so we don't really say there is not a lot to do in this area, but maybe in the future.
Yeah, I would say from definitely I can't talk about healthcare, but in terms of real estate, I think what from a luxury point of view, retail luxury. So I'm talking less about hotels and more about shops. Is very, very different what's happening around the world. So you have a situation like the States, and in particular New York, that has been for a long time a huge cash machine. If you think more or less 100 square meter in a prime location like Madison or the Fifth Avenue would be around 1 million. So in this moment, there is 250. In this moment, there is 250 locations that are empty. So make your maths. There is an average of 220 square meters is an average shop. So you can imagine how much unprofitable retail space there is now in prime location in New York. So definitely this is not a super fine moment for them. Some people are not sleeping on the kind of, and it's a very leveraged business. So if you are expecting to have a kind of a cash inflow in this moment is a problem. In UK, with the problem with the pound, Brexit, and a lot of uncertainty, is also a market that has been growing, and people have made a load of money, but they do castles. They buy on top of other properties, and in this moment is very fragile. So a lot of unsaid things about that. If we come to places that are incredibly behind from a real estate, like Italy, I think there is other questions to be asked. That is how, from a government point of view, regulation, taxes point of view, that also don't make this market particularly easy, but definitely is underpriced. So I think that this is there is opportunities, but it's not an obvious win.
Okay, thank you. The very last question is the question we decided to skip, and I gave the mic to Riccardo, so Alessandro is for you, because Sara and we agreed, it's a secret agreement, to put on the table last question. It's related, what you see in the future related to Donald Trump and growth in the United States. So it's a very, simple question.
I was waiting for that to come up. Well, for years I got so much grief from the Americans about Berlusconi. We finally can get a little revenge.
Good answer.
I think nobody knows what's going to happen here. I mean, because he's trying to basically disrupt and undo everything that was done in the past 8 years. Some of which is probably good projects, like I think some of the markets got, like the financial services market, got overly regulated. So undoing some of that is probably a good thing. So unfortunately the pendulum always swings to the extremes. And I think that's what happened after 2008, that the regulatory system really tied down the financial services market in a way that was probably exaggerated. So that's a good thing. Undoing the Obamacare or other things, I don't know. I mean, it doesn't seem like a great idea. So they just went through the first round of through Congress. It's not done yet. It has to go through the Senate and then go back to probably to the House again. But I don't know that it's such a complex problem. I don't know that they can come up with something better than what was put in place by Obama. And then everything else, I mean, I think it's between a joke and a tragedy, you know, because you know when you talk about the issue with the immigrants and the wall between Mexico. I mean, I don't know how they came up with this, but you know, he's a very volatile type of person, and but the thing that can be said about him is that they made a series of campaign promises they tried to execute on, right? So actually, he tried to deliver on everything that they promised. A lot of things are not going through, which is good. We'll see how that evolves. But I think that no matter whether you're a Democrat, first of all, I've never seen so many. My office is like a block from the Trump Tower. Okay, so I've never
it's
seen
very
so
downtown,
many,
however. So
it's a bit down.
no, it's okay.
So I've never seen so many demonstrations, so many political demonstrations in the U.S. in the 40 years that I've been there. It never happened to this extent. I've never really seen it. It's really remarkable. And the other thing is, whether you're Democrat or Republican, it's really there's a sense of discomfort. We really don't know where this thing is going, right? Because he's obviously not an experienced politician. It was pretty clear from the beginning. But his game plan is so. It just makes you uncomfortable. You just don't know. Usually, when you have a new president, you might not agree. It may be on the opposite party, but at least you know they behave in a certain way. In this case, you don't know what to expect. You know? So you have the issue with Korea. You have the thing of the wall. You don't know what's going to happen with the Middle East. You don't know what's going to happen with immigration. It's a little bit chaotic. And
so we have to check in the next MBA reunion in a certain sense.
Yes, I'll be happy to come back.
That's great.
And report back to all of you.
Thank you. So thank you very much to Sara. Thank you very much to Alessandro and Riccardo here again.
Thank you. Thank you, Sara. Thank you, Alessandro, for being here. I think it has been a great session again. Just a little, this is a little matter of the Largo Treves first Bocconi building. And for you too, Alessandro, I have one. This is the Largo Treves Bocconi building at the beginning of 2002. Thank you for coming, by the way, expressly flying in from New York this morning. We discovered you were on the same plane, Alessandro, no? You were on the same plane? Yeah, probably so. Yeah? Okay. Okay. Can I help?
Yep.
Oh. That's okay. That's okay. And again, really appreciate this session. And I would like also to thank again all the topic leaders and all the faculty members for, let's say, animating this session. This is very, very appreciated. Again, Sara, again, Alessandro, thank you for coming.
Thank you.